Hello, I'm Stuart Simpson. I'm the CEO of Vertical Aerospace, and you're watching Taking Stock.
2 minutes to go here into the close on Wall Street on this Monday, January 26th, and the tail of the tape here with about a minute and a half or so left to go into the closing bell. Not quite all-time highs, but strong performance across the major market indexes, and at least one all-time high in the form of the New York Stock Exchange Composite Index. As for the best and worst performing sectors in the S&P 500 today on this Monday here on Wall Street, we are seeing gains to the upside led by technology shares, telecom, as well as utilities, with the laggards on the day being discretionary staples as well as energy. Welcome to the broadcast on the snow day edition here of Taking Stock. You are watching Taking Stock. We are moments away from the ringing of the iconic closing bell here at the New York Stock Exchange. I am your host today, J.D. Durkin, the great Einstein of Wall Street himself. The one and only Peter Tuchman is on deck. He'll join us right after the bell for his take on today's volume, price action, and much more. We did see yields somewhat pull back in the session. Looks like the 10-year at this hour down about 1 basis point, still trading to the top of its multi-month range going back to September. The dollar falling yet again here today on Wall Street, making that 5 out of the last 6 sessions its lowest point, going all the way back to September 18th. The oil benchmarks, Brent and WTI, both in retreat on the day as well, and the crypto majors in mixed territory. Bitcoin currently trading at about 88 and change. We'll track more about what's going on with the crypto majors here in just a bit. The Mag 7, mostly strong performers. Apple, the outperformer, a few days ahead of earnings. Time now for the closing bell. The team from Hecla Mining Company, ticker symbol HL, here at the NYSE, doing the honors. And there you have it. We bring about a close to trading here on this Monday, January 26th. Your final tail of the tape on this Monday. The S&P 500 will finish in positive territory, about 0.5%. The Dow 30 up 0.6%. Fresh all-time highs for the NYSE Composite Index, and the small caps, a little bit of profit taking off the top, down about 0.4%. Advanced to declines telling us that breadth is pretty neutral, at least on the surface, but volume tells us money much more flowing into the losers than the gainers on the day. So a bit more defensive posturing, not really the chasing of risk across the tape. Let's bring in the man himself, the great Peter Tuchman, the Einstein of Wall Street, the institution inside this great institution. Welcome to the show as always.
Thank you. Always a pleasure.
What do we see in terms of, I didn't see the total close, looks like 1.1 billion on volume.
Yeah.
So you got a nice closing auction surge.
We've had, I would say the last week or so, we've had solid volume. I would say for the whole month of January. We're in 1213, which is, significant. And I think what we're seeing is interesting to examine is advance versus declines. In a market that's positioning itself, the couple of the first 2 weeks are sort of a bit of a roller coaster, not decisive in direction. I think we are sort of heading in a more bullish posturing that we've seen, but you're also, if you look at advance versus declines, it's 50-50, which means that people are getting out of one sector and into another. As we've noticed here, the only sector that was, the only indices that was really down that got hit, a reversal, was the Russell, right? And that's your mid-cap, small cap. So while, we had just beautiful, the walk of fame, in all the other indexes, right? A solid day across the board.
You and I have talked for many years, corporate earnings, the lifeblood of these markets. For the point about general breadth and rotation out, we do have a lot of these big mega cap names. We're going to get some big Mag 7 earnings coming up on Wednesday and Thursday. What are you looking for to give you some sign of confirmation that a lot of the underlying momentum can continue later into this week?
Well, look, all I can do is gauge from the people around me who know a lot more about it than I do. If last quarter was any view of what's going to happen. Obviously Palantir and NVIDIA, those earnings were spectacular. Even though they had such a huge effect on the market, the way it responded, right? NVIDIA into that November 3rd release of the earnings, right, was up 7 days in a row. It sold off. That affected the market, as well as, NVIDIA sold off for 3 weeks in the advance of those earnings that were spectacular. My gut is that the demand is still there. I speak to Dan Ives a lot. He's my tech guru, and he said that if you look at it globally, the demand is still huge. 4 data centers, for AI and for that whole sector. The money is being put to work into the trillions. The CapEx expenditure is massive. So, you know what? I don't see any reason why, they shouldn't be as robust as they were last quarter, but anything can happen. We've been trading, and it's important to notice, we've been trading in the dark around a lot of economic data, which could affect how these earnings come out, stuff that we may not know. So we could get, smacked in the head by something, but
and we could have yet another government shutdown. Part of the reason we've been in the dark was we just climbed ourselves out of the longest government shutdown in history.
Correct.
And now, given recent events, we may be heading for another one on Capitol Hill. We do have earnings Wednesday from Microsoft, Meta, and Tesla. Thursday, Apple. Wednesday is also Fed Day. Peter, we love these weeks. There's so much to go through. What are you looking for?
You know what? There's absolutely nothing. This market is never boring. If you ever sit back and get complacent about the market, just wait a minute, right? It's like the weather. It's like the weather in New York. I think that all eyes are going to be on the Fed for this week. Obviously, we're not, there's no major probability of anything kind of a cut, but I think obviously when there is no number that is discussed, I think the most important thing is to sit and wait for that 2:30 press conference, because everybody's going to be hanging on every word coming out of his mouth about what it looks like about his exit out of this situation, about who the next person is, how dovish, and what their posture is for the rest of the year. We know that Mr. Trump is going to put a very dovish person in there, whoever it may be. I think there are 2 or 3 different people on the agenda, but we know that interest rate cutting, we're in the midst of a cycle. Sure. Historically, when you're in the midst of that cycle, you have a double-digit growth in the year. So, I think all things are pointing to a solid, strong market. Dow 50,000, S&P 7,000. It's still just
could be coming
teasing
soon.
us. Yes, it is.
And we'll have
They're making us work for it.
We will have you. Yeah, you're not kidding. We'll have you back as soon as I do. The great Peter Tuchman. Thank you for being here as always. Kick off the broadcast.
Thanks,
Jeremy will grab your mic.
Trading.
Howard, you and I will head this way. We'll give you a quick earnings preview for a few key names. Hello, everyone. Ian, didn't mean to make a stutter step there. All right, we'll give you a quick earnings preview for a few big names expected to report quarterly results tomorrow morning before we reopen for trading. We'll talk first and foremost the Dow's worst performer for 2025. It was UNH. It has missed on earnings 2 of the last 3 quarters. Pretty range bound going back to August, but expecting earnings per share on UNH of $2.10 a share and revenue of $113 billion. Next up is BA. That's of course Boeing, sold off 10% over 2 days after a miss on the last earnings call, but is up 40% since the lows of Thanksgiving. And finally, General Motors. We also hear from the team at GM tomorrow. Earnings estimates of $2.25 a share off revenue of $46 billion. Down so far here year to date, but GM shares up almost 50% over the last 52 weeks. Howard, take a look at 2 here NYSE notables. Really excited about these today. How about Dollar General, which has been absolutely crushing it. One of the best performers in the S&P 500 today. It has been on a tear, up 14% already from the start of the year. And get this, it's up 110% over the last 52 weeks. Dollar General operates almost 20,000 stores across the U.S. and Mexico. CEO Todd Vaso saying last quarter they are seeing, quote, disproportionate growth from higher income households. A fascinating story on the so-called dollar discounters to pay attention to for the rest of the quarter. And Howard, how about this way? This is the Horizon Kinetics Inflation Beneficiaries ETF. If you don't know, it's ticker symbol INFL. Gives you some really heavy exposure to some of the sectors under the surface. We don't talk a lot about that. Really have been the outperformers. It's consolidated around financials, energy, materials, up 12 days in a row and up more than 12% from the start of 2026. Last Friday, down here on the trading floor of the New York Stock Exchange, I sat down for a one-on-one interview with Michelle G. of Players TV. We talked all about the athlete-creator economy, athlete-led media, and much more. Take a look. Michelle G. joins us now here on the trading floor of the New York Stock Exchange. She is the president of Players TV, here to talk all about the athlete-creator economy, top priorities for 2026, and much more. Welcome back to the New York Stock Exchange, I should say, and it's great to have you here today.
Thank you, JD. It's good to be here.
So let's start right there. What actually is the athlete-creator economy, and how do you view it as a fundamentally different model than maybe more traditional endorsements, Michelle?
Yeah, so when you think about sports, you think about live sports. You're watching a game, you're watching highlights, but what Players TV is built to do is to allow athletes to have their story, tell their story around the things they're passionate about. And JD, I can't begin to tell you how incredibly successful that has been, because people are so interested in what they do outside of their day-to-day job, right? And so we're building something pretty phenomenal.
I mean, it's amazing to look at media distribution for athletes, not just former athletes, but current athletes who now have their own podcast and they have their own shows. And That didn't really seem to be much of a part of the equation when you watch the Chicago Bulls in the
Yeah.
1990s.
JD,
The game of distribution's changed a lot.
I want all of those athletes on Players TV. This is what's going on, right?
Yeah.
Right now, we are transacting in an economy of likes and impressions. How many likes did I get? How many impressions did I get? But really, the game is distribution. How many people can I reach? And that changes the narrative entirely. So what Players TV does, it has like crazy reach because we have distribution across DirecTV, across Philo, across Fire, right? So these big distribution platforms, including YouTube, which we know is now the #1 streamer. So what we're allowing our athletes to do that want to tell their story is to aggregate them in one place to actually reach 200 million people across the United States, and we're going to push internationally. That allows them to make more money, to bring brands along the process because there's greater authenticity and engagement. So distribution is the game, but a lot of people don't know it. So we are so excited to teach them that, to share that with them, and to bring them into our family so that everybody can benefit on the back end.
Michelle, you are around these athletes every single day. Talk about authenticity. What are those off the field or off the court stories that you find they really want to tell that we don't get to see when we tune into the games on primetime?
Well, I'm not around the athletes all the time. I hope I'm around the business, but I understand what you're saying, JD. And what I would say is this, is that when we had this notion and DeAndre Jordan wanted to talk about cooking clean, we're like, the engagement around that has been tremendous because he changed the way he's eating, he's living, and it made him a much better athlete, right? We have Aerial Powers who wants to talk about dating and the number of chicken wings you eat. The engagement, 500,000 views in 24 hours is crazy, right? So we know that there is this story, and then I have to end with Dr. Myron Rolle. Like, how do you play football? Then you go back and get your a medical degree, and now you're a neurosurgeon.
Wow.
And you're talking about healthy living. Like, what an amazing, not only inspirational story to say that I don't have to end here, but I can do more things and I was born to do more things, but what an amazing opportunity for brands to connect with those folks that are already following them. Because remember, the brilliance of this narrative, the brilliance of Players TV is that we're taking and partnering with athletes that already have millions of followers. So it's already inbred, and we're expanding that to a new audience. I love it.
It's very clear from the enthusiasm with which you talk about, and it's such an exciting underlying product. So that's the athlete side. How about the feedback from the audience themselves? What sorts of stories do they want to hear? They have watched these athletes play at the biggest stage of the world for the sports they love for so many years, and maybe they want to know a lot more about the people, not the athletes.
Yeah, they do. You know, when you think about, and I've been around this business for 25 plus years, and I have seen in real time by, you know, running Ebony and running Essence and running these editorial platforms, that when we post stories about their love life and how they grew their finances and about their children and about how they connect with their, the engagement is tenfold. When they talk about they scored 50 points, you get 1 like. When you talk about, I am now donating back to my community, and I created a community center, my mom is the executive director, 1 million likes. So we are paying attention to, and we are living in a time when analytics and data can drive so many things, and that helps us build the stories and help us guide and direct our athletes so that they can connect where their audience wants to meet them.
An amazing interview, and I'm so grateful for your time. And every sports fan, this is the type of stuff we love. We want to hear these off the court and off the field stories. The great Michelle G, president of Players TV. Congratulations on all the success you've already had, and best of luck on the road ahead. Great to have you.
Thank you so much. Thank you.
Welcome back to Taking Stock live from the trading floor of the New York Stock Exchange. The NYSE's very own Kristen Scholler recently sat down with Nick Dukoff of the Solana Foundation to talk all about the ways that why tokenized securities are going mainstream. Take a look.
NYSE-listed digital asset infrastructure company BitGo generated headlines as the first crypto firm to IPO in 2026. That's not the only news the company is tied to, though. Blockchain ecosystem firm Ondo Finance says that it is bringing BitGo stock on-chain to the Solana platform. Well, joining me now with more is Nick Dukoff. He's head of institutional growth for the Solana Foundation. Nick, welcome.
Thanks so much for having me.
How big of a development is this for the industry?
Yeah, it's huge. So earlier, in the last year, we saw some of the exchanges go public. Coinbase a few years ago. Last year, we saw Bullish, Gemini, others go public. Then we saw some tokenization companies go public, Circle for stablecoins, Figure for real world assets. And now today we've got BitGo in the infrastructure space that's gone public. I think it just shows the maturity of the industry and how there are lots of billion-dollar companies out there that are going to be able to access capital markets. And that, of course, brings more liquidity to and interest to the ecosystem, which will grow it. And it becomes a flywheel, which is terrific.
Why is bringing a stock on chain on day one important?
Well, I'm really excited to share that Ondo has brought BitGo to Solana on day one, as you mentioned. So what that means is that in addition to folks that can buy BitGo today in their brokerage account, Fidelity, Schwab, or whatever, people all over the world, the 80 to 100 million monthly users of Solana all over the world can now buy BitGo directly in their Solana wallet. And that is an incredibly amazing development. But why is it important on day one? Day one is important because it really shows the market where that stock is headed. If there's a lot of interest on day one, that again brings more eyeballs to the stock and there'll be deeper liquidity and there'll be more trading in it. And that will ultimately help that stock perform well over time. Of course, not always, but generally. And it's wonderful to see a stock go public here on the New York Stock Exchange and also go public on Solana on the same day.
It is incredible to see just the action that has been transpiring, certainly here on the floor. Now, when it comes to Solana, what makes that an attractive venue from their vantage point to launch an asset?
Yeah, well, like I said, Solana's vision is to have all assets and all global investors trading in the same liquidity venue. And so what you have with the New York Stock Exchange is all of the brokerages that have that stock, of course, and their customers can trade it. But with Solana, you've got all of the people in the world that can trade that tokenized equity. So you're not just limiting yourself to whoever has a brokerage account. You've got the whole world. I was with one part of the leadership of Pakistan's crypto uh, uh, apparatus last week in Switzerland during the CFC conference, and he was telling me only a few 100,000 people in Pakistan have a brokerage account, but 40 million have a crypto wallet. And so when you think about that, if you're limited only to the folks that have access to a brokerage account, that's a much smaller universe of investors than those that have a crypto wallet.
And Ondo has announced that it's brought over 200 tokenized stocks and ETFs to Solana. What does that mean in terms of expanding what's possible for on-chain finance?
It's wonderful to see Ondo bring 200 equities to Solana. That now brings us to 250 because previously Kraken, through their company X Stocks, which they recently acquired, had 50 stocks tokenized on Solana. Also today on the big screen, we had Superstate, which raised a $82 million Series B financing. Superstate has tokenized Galaxy stock and Exodus as well on Solana. So you've got companies like Superstate, like Kraken with X Stocks, like Ondo, all bringing tokenized equities on Solana. And right now, while it's only a few hundred tokenized equities among the thousands that are publicly listed, one day I'm certain all assets will be tokenized on Solana.
Nick Dukoff, head of institutional growth for the Solana Foundation, thank you so much for joining me here at the New York Stock Exchange.
Thanks so much for having me.
Welcome back. The New York Stock Exchange's very own Kristen Schuller also sat down with Michael Blaugrind of the Intercontinental Exchange for a one-on-one interview, talking all about the opportunities behind the NYSE's new tokenized securities platform and what it will offer to traders. Take a look.
Earlier this week, on Monday, the NYSE made a big announcement. It's developing a tokenized securities platform that will allow for round-the-clock trading. The new digital trading venue, which will include tokenized stocks and exchange-traded funds, is set to launch later this year, pending regulatory approval. And joining me now with more is the man spearheading this initiative, Michael Blaugrind. He's VP of Strategic Initiatives for Intercontinental Exchange, the parent company of the NYSE. Michael, welcome.
Thank you so much for having me. It's great to be here on the floor of the NYSE.
Yes, it's great to see you, of course, in the NYSE. What does this mean for traders?
Well, what we're really excited about with the new tokenized venue is that we're going to offer a complement to the very well-functioning, very effective traditional markets with a tokenized offering that will enable the user experiences that are becoming sort of the de facto standard for today's retail traders. That includes 24/7 operations. That includes the ability to trade in fractional shares, meaning you can put in an order in dollar-based quantity instead of in share-based quantity. And it'll have the ability to instantly settle into stable coins so that people that are coming into the investing world through the crypto environment will have a very natural transition to invest in the world's best companies.
Tokenization might be a new word, let's say, for some investors. Is that simply a digital representation of a security? How would you describe it?
Sure, you put it very well. Tokenization is using blockchain technology to encode in a smart contract the nature of that asset. With respect to our solution, we're going to integrate both with traditional securities that are tokenized via the DTC, which is the depository for the traditional book entry securities, as well as digital transfer agents, companies that are helping issuers bring tokens digitally native into the primary market. We'll support both of those types of securities and will allow people to trade on NYSE tech, but then settle onto a blockchain.
So it's building on that infrastructure that already exists from a technological standpoint. Is that right?
That's right. So NYSE members today could subscribe to this new venue. They can use technology with which they're very familiar already. And we're going to use market structure conventions that are very traditional. All of our trading will be intermediated by broker-dealers who are registered. The venue is going to respect investor protections that are common in the market, like limit up, limit down, volatility controls, and trading halts, and protecting the NBBO, which ensures that trades don't go off at aberrant prices. So we feel like we're able to introduce something that's going to leverage the best of this new technology without requiring really any significant regulatory exemptions or new policymaking.
So for traders, they get 24/7 access. And for issuers, what does this mean?
So I think there are a number of issuers, particularly some of the largest ETF issuers, that are very, very interested in getting their products in front of this next generation of investors who perhaps are coming into the market through crypto. Maybe they're getting interested in quantitative trading through prediction markets. There's sort of a whole new spectrum of people coming into the space. And so to the extent that there are investment dollars looking for a home that are currently living in digital wallets and maybe they're being funded in stable coins, our venue is going to offer an opportunity for those ETF issuers and crypto forward corporate issuers to begin to bring their products into that ecosystem.
Now, this is under development. I know you mentioned it is pending regulatory approval. What are the next steps in this development?
So we're working diligently with the regulators to prepare for the approval process. And we anticipate that that will go smoothly given that we're largely conforming with the existing conventions. We're working with a number of our broker-dealer members to understand their desires and potential engagement as we shape some of the final details of the trading algorithm and execution models. And we're engaging with the ETF community and other issuers who are very interested in understanding how this will work and how they can adapt to take advantage of it.
I hope you'll join us again, Michael, so we can get updates on the creation of this new platform built on the NYSE existing technology. That's Michael Blaugrund. He's VP of Strategic Initiatives for Intercontinental Exchange, or ICE for short. Michael, thanks as always.
Thank you, Kristen. Great to see you.
Great to see you.
Welcome back to Who in the F Knows 2026 predictions. I'm Scarlett Sieber, and today we're tackling one of the cheekiest predictions yet. If you're new here, here's the deal. I break down a bold forecast for the future of finance and give it a verdict. Either bank on it or bounce it. Because in fintech, you can stack those chips, but let's be honest, who in the F really knows? Let's cash in. Today's prediction comes from Donam Nursigadu, who is part of our awesome Europe content team. And here it is, people. AI will change everything by changing nothing in 2026. Yep, that is the type of a mic drop moment that I'm looking for. What does this mean? Donham argues that while AI could revolutionize finance, it's only as good as the fundamentals: data, processes, skills, execution. And spoiler alert, a lot of companies are still struggling with at least one, if not multiple, of those things. He even compares it to the fintech ecosystem after the 2008 financial crisis, where some players are already repeating these same mistakes. It's not even been 20 years yet, people. Come from history. Okay, Donham, this is cheeky but clever. AI is the shiny new toy that we all love to play with, but it's not a magic wand. If your data is garbage, your processes are stuck in 2015, and your team thinks prompt engineering is a yoga pose, AI isn't going to save you. It's like bolting a Ferrari engine onto a car with flat tires. You ain't gonna go anywhere, and you're definitely not gonna win the race. So my verdict on this one, it's going to be a bank on it with a little wink, because AI will absolutely change everything, but only for the companies that have their act together. For everyone else, it's going to be a lot of hype, a lot of press releases, and not much substance. So here's a stat to back this up. 70% of financial institutions experimenting with AI cite data quality as their biggest barrier, and nearly half admit they don't have the talent to scale beyond AI pilots. Translation: the tech is ready, but the humans, not so much. Bottom line here is AI is a game changer, but fundamentals still matter. The question is, who's going to step up and actually do the hard work? What do you think? Are companies ready to make that leap, or are we in for another round of hype cycles and buzzword bingo, because we love that game? Drop your thoughts and check out the rest of Who in the F Knows 26 predictions at money2020.com, because in fintech, the only sure bet is that nothing's guaranteed. See you next time.
Hello and goodbye, one and all. Thanks for watching today's edition of Taking Stock, and we will see you again tomorrow.